Is the housing market finally getting back to normal levels we seen prior to the pandemic? Well, I'm going to give you the answer, and it's a yes and a no. And I know that sounds very confusing. I'm a little confused myself, but I have some data here from SacramentoAppraisalBlog.com where he outlines basically the data for the yes, going back to the normal levels that we saw prior to the pandemic, as well as the no category of it still being inflated marketplace here locally. And before we dive into this data, as always, I appreciate you guys supporting my channel. As always, I am the opportunity realtor. If you're looking for any opportunities or you're trying to capitalize on the opportunity that you currently have, please feel free to reach out to me. Happy to help you with that. So let's from Ryan Lundquist over at SacramentoAppraisalBlog.com, and the headline of this article is the housing market back to normal levels? Now, as we jump into it, from a lot of metrics, we're technically getting closer to normal pre-pandemic levels. We're seeing the price growth at 6 to 7% instead of the 15 to 20% we saw this time last year. Now, the monthly supply has ticked up. Properties are not getting bid up like they used to, and it's starting to take a lot longer to sell. So technically, many of the housing metrics are flirting with the normalcy. However, there's some abnormal things still happen. So we'll go into the normal section for the normal housing market. Now, the bidding wars have calmed down, and what he means is the number of properties are selling below the original list price and is starting to approach back to normal levels. And here is the graph where you can see basically everything in 2018, 2017, 2016 is our quote unquote last normal market. And that is basically this group up here. And you can see that starting this year, we were going down low following the 2021 averages here in the yellow or gold line. And we have dramatically gotten into the uptrend into this normal territory that we saw previously. So that is going into the normal marketplace for that. And this is an example number 2. And it's taking longer to sell a property. Now, we're not back to the normal levels we saw in the red line, but we're getting very close. And you can see in this graph, the red line is the averages over the past 5-6 years, and we are getting close to it. We haven't got into this little hurdle or this bundle of lines, but we are getting close and we're making our way up there. So definitely have to see as the data comes out if we continue that uptrend, but I expect we will get into the normal levels. Now, what is not normal is a sharp rise in inventory. The sales volume last month was down 25% from June, this time of June last year. The pending contract volume was down over 25% as well in the same time of this time, June of 2021, and price reductions have seen a sharp increase. Now, we already went over the price reductions, and basically I did a whole video on the price reductions, and I'll put a link to that video if you guys have yet to see it in the top, I think left or right corner. I gotta still figure that out. But here we go into the not normal graph, and you can see the sales volume in Sacramento County for June is down to one of the lowest levels in the past 20 years. You can see this is where we are in 2022, and the average right here is this black line, and we haven't seen this low volume since 2007. So not to put on that little crash hat, but it's very interesting to see. I mean, it's still quite a ways to go, right? Down from what we saw in 2007, just under 1,000 sales for the month, and we are at, what is that, 1,250, we'll say right in the half of that right now. So not too bad. This graph right here is definitely getting into something that we are going to pay attention to for the foreseeable future until things either is officially back to normal or we get another crazy jump or whatever have you. We will keep watching the sales volume. Okay, on to the next one. the number of pending contracts. Now, this is down in most counties by 25% or slightly more. The number of pendings at this time of the year is clearly below the normal trend, as we can see here in the black line. And the future hasn't happened yet, so we have to see what this line does. But just looking at this graph right here, you can see that ever since March, we've been on a steady decline on those pending contracts. Now, pending again is whenever you make a offer on a property and the selling side of that transactions agree to take your offer, you are now pending, you are locked into contract for purchase of that property. Now, his closing thoughts there's basically many metrics hovering around the normal level and almost normal levels for the time being. So he can understand why people are saying that the housing market is normalizing or trying to find a balance. It's like we're, in his opinion, been on this honeymoon for 2 years and it's starting to feel like real life instead of the endless Mai Tai vacation vibe. So the biggest truth is we are in the midst of a change due to dropping buyer demand with the insane increase in interest rates and the increasing supply, which, whenever buyers start to leave the marketplace, that just automatically increases the supply. So it's not like sellers are rushing into the marketplace right now to sell their property. Yeah, we've seen a little bit higher tick, but it's a lot to do with basically the buyer pool. So the inventory is jumping up a little bit, but the main reason for the supply is coming from the lack of buyers purchasing the property that we've seen these last 1.5, 2 years. So that is the actual supply. It's not seeing this massive amount of sellers rushing into the marketplace to try to sell while they can. So if we go back to it, we still need more time and objectivity to see how long-term. So we need time and objectively to see the long-term trend, but for now it is definitely apparent we have seen a shift from the really aggressive marketplace to a more buyer, I struggle to say buyer friendly, but it's becoming more of a buyer's market than we have definitely seen in these past couple of years. So there's certainly deals still happening, as 75% of the pending volume was present last month, and 40% of the pendings in July had multiple offers. So that is still very good. Quick rise in the supply, as I was just talking about what we've seen in the supply. It's not as he says right here, it's not that there's so many more sellers that have listed their homes. The real culprit is the fewer pending contracts, as I just explained, which has caused the pile of available listings to grow exponentially. Now, the monthly supply is at 1.74, which isn't historically high, but it's high enough to help change the feeling or the feel of the marketplace. So as we move on to the next part of it, he goes on to say that one more thing, we are typically starting to see fewer listings hit the market around this time of year. And this is so historically throughout every real estate market, if it's on the downturn or if it's on the upside, going into August is really when it starts to level off and starts to take a little bit of a dip. And then it starts to continue to go down as people get ready for the holiday seasons. Majority of people are focused on Thanksgiving, Christmas, spending that holiday, the last part of the year with friends and family, and they're not so much into the marketplace. Now, that's not saying that everybody is that way. The bulk of the better deals out there do happen in the fall and winter times. So the graphs here, so the rest of this article is just going to show you some graphs, and you can see that this is the months of inventory in the Sacramento region. And whenever we hit 2 months of supply, that is technically called a, there's a good amount of supply in the marketplace. And then whenever we're in the 1.5 or lower range, we're in a severe supply shortage. As you can see, what we've seen basically throughout all of 2021 and going into the, let's say, the beginning or the second half of 2020. And now we've started to jump up with that supply. So as we go here, these are the price drops in active listings. And you can see all of Sacramento has had 43.7% of the active listings have had a price drop. Placer County saw 45.7%. El Dorado County saw 47.8%. And Yolo County is at 40.5%. So now how much was the price reduced before getting into contract? And you can see the last video that I did for the price drops, we saw that so this is updated. This is an updated graph I'm about to show you guys here in a second. And we saw that the bulk of the price drops were coming in from the 5 to 10,000 mark, and now we have shifted more to that 20 to $25,000 price reduction mark. And again, if you missed that video, I'll put it in one of these corners here, and you can go and check it out. So we are starting to see more of that $20 to $25,000 price drop, with a very close $25 to $50,000 price drops before getting into contract. And now this is how much the sellers are reducing their price, looking only at listings with the price drops. And we can see the bulk again coming in at 10 to 25 grand, and then closely following suit at that $25 to $50,000. And here's a little heat map you can see in all the Sacramento region, and the bulk of it is now shifted. Well, it's still heavily in that 5%, but it's starting to move down into that 10% range. So moving on to the next one, we're seeing that prices are softening, and this is a price graph, and you can see that we are going up, come down, going up, come down, and on a linear scale, this is still great growth, but we are coming down quite sharply, at least here in the average sales volume and our average sales price, excuse me, as well as the median price and the price per square foot. So going on to the next one, you can see here that June is in black. So we typically, well, last year we saw a huge spike before we started to see it level off in those in the September, October months, before it came down into November and December, and then had its little upcrease. But we have seen it come down substantially since what we saw going into the springtime of this year. And you can see that historically in June is kind of our tipping point. Like it's we have our best months in June. A lot of homes close, and then it kind of just starts to level off, as I said earlier, and then goes into a little bit of a downturn for the winter months, and then it continues its rise up. So here is another graph where you can see the year over year. And this is the Sacramento region housing market. So you can see that in June of 2021, the median price was $575, and then in June of this year, we're at $610 for a 6% change to the upside. The average price was selling at $644.935, and then that was June of 2021, and then we go to June of 2022, where it was $681,000, excuse me, $281 for a positive change of 5.6%. And you can see the average square foot, but right here, the number of sales has gone down dramatically from 2,800 and some change, or we'll call it 2,900 just for the sake of it. And we are going to 2,141 for a negative 26.1%. That's pretty substantial from this time of last year, especially on this, what we just saw. Usually we see a big increase going into the June months, especially on last year, and then it begins to fall. So we are seeing June already stacking up, not being the best of months. So going over here, this is Sacramento, and you can see that we have also had a negative 25.4% for the number of sales, while we've seen just a moderate price increase from this time of last year. And then we go over to Placer County, we can see again the price change to the upside is only 6%, but the number of sales has fallen 26.5%. Pretty, good amount of negative year-over-year sales volume. And then going over to Dorado County, you can see again the price growth is only about we'll call it 6.5% between the two. And then we've got the number of sales going down 18.1% from a year-over-year basis. And then going into Yolo County, we can see that the price growth is actually quite bigger at a 10% increase from year over year. And then the negative 19% for the number of sales on a year-over-year basis. The month-over-month housing market data for the Sacramento region, you can see that the price growth from May to June is down 2%. The average price point is down 4.6%. The number of sales is down 1.6%. The months of supply is grown by 38%, and the days on market grew by 3 whopping days for an increase of 23%. Now this is Sacramento County, and you can see the months of supply increased 38%. The number of sales were down only 0.4%, which is good for Sacramento County. Price growth dropped only 2.6%, and the median price, the average price, I've been saying price growth, but the average price has dipped only 4%. Now going on to Placer County, we can see right here that the median price changed 2%. The average price sold is down 5.8%. The numbers of sales are flat on the year, and the months of supply have increased 35%. And the days on market grew another 3 days to 42.9%. So all in all, there you have it. We have more of a case for a slightly declining marketplace, and that's the no, right? So as I said in the beginning of the video, it's yes and a no for are we getting back to a normal housing market? Well, the no is really coming in as we're seeing a lot more negative growth on a year-over-year basis, which is fine. It's putting into all the factors of the price appreciation that we've seen the last 2 years. And then for the yes side, we are beginning to see that inventory go on the marketplace. We are seeing it take longer to get into contract just by a couple of days on the average. And we are beginning to get that normal feel where we're not getting 15 offers on a property, and we're not getting that $100,000 over ask price. So there you have it. It's split on both sides as right now, slightly more for beginning to go into a buyer's market, but we're very close into that 50-50 of the housing market beginning to come back to normal. Well, until next time, I'll talk to you guys soon.